Hey, it's Mack with PriceActionTradingSystem.com, and this is Thursday. It's October the 10th. This will be our chart lesson for today. And what I saw when I came in this morning was a spike in a channel. You can see that, and we broke out of the channel here, and it just so happens this line is the same line as this one, coming off the very lows right there. You can see that, but basically it's the same line as these others. For some reason the angle's a little different there. Let's just correct that. I don't know why it's slightly different because I copied it off of the other ones. Let's just double check it now. Yeah, maybe I adjusted a little bit. There you go. It's pretty much the same same line. You can see that, and it's just at a different level. And but what I saw, I didn't have this in here. I kind of saw this as a spiking channel, and there's kind of a midline right in here that held prices on both sides, kind of. But for the most part, till about, the first, from where I came in around 7 until about 8:30 when the market opened. Everything is above the EMA. Everything's going higher. Um, these little trends, see all these little small tiny bars that just keep going higher and higher, and the little tiny swings. That doesn't look like it, but that is a strong trend. So remember that when you see it. And it's the same thing on the downside. Those are strong trends. So um, don't lose sight of the value of them or the importance of them. I just moved that up, and you see how that kind of fits right in there. So I kind of moved it up later. But anyway, the gist of what I'm getting at is this is a spike in a channel. And you already had this one leg in place. And if you measure that leg, and really you just about have to include that lower bar there. If you measure that leg and move it up, so you're looking at a target of right here. And look where we've made it to this afternoon. We're finding resistance. And that doesn't happen by accident, I promise you. This one wasn't near as strong as this move, but all the same, it's a measured move. And then we've kind of gone into a correction that's been going on, wow, since I'd say that's when we hit the target. We went a little bit higher, so just before 11 o'clock, and so it's almost 1 o'clock. So the last 2 hours, there's been basically nothing going on. Okay, had a slight interruption there, but you can see not much has happened since we made this high. We kind of made some couple of lower lows there than this little trading range here, and we found resistance off that again. Basically, what we've got is a real tight trading range. And will we sell off from here? I don't know. We'll just have to wait and see. It is a break of this channel and then a new high, so it wouldn't surprise me. But the thing you got to look at is just because you get a break of the channel and a new high doesn't mean you're going to get a reversal. It just means the rule is we'll get a correction that usually lasts at least an hour or more. And so here we are. This started at about 11 o'clock, and we've gone till about 1 o'clock, so there's 2 hours in there. So this thing could end up selling off from here, or it could start another trend from here. And on a trend this strong, you just never know what's going to happen. But anyway, the rules have pretty much followed exactly what you'd expect if you found the channel. And even though you got a little trend here, this is really the correction after the break of this channel. And people will send me stuff, and they got trend lines all over the place. And it doesn't mean that that prices, I want to say this in the right words, but people will send me stuff, and it looks close, but it's not right. And again, the way you usually know if your trend line's right is if prices are reacting to it multiple times. And you can see off this top, how many times we touch that and turn down. And if you just drag that down, it tends to fit on the low side. And then after we broke it, we came back and tested it on the high side as well. So I'm pretty confident that that trend channel is correct there. And doesn't mean that there's not a short-term trend even right here, because there is. And notice you get the break, the new high, and then you get a little correction there. But you're not going to get a lot of times all you'll get on these kind, like here's a good example right here. You had a little short-term trend coming down, you got the break, and you got a new low. On this one, it's hard to see here. Let me back out. But this is more common on a shorter term one. Is notice how we were coming down, we got the break there, and we come back a retest, and we don't get a new low, we just get a retest of that trend line. And that's all you're probably going to get there, because the market's just too strong. So, it doesn't mean that your trend line is not correct. It just means that, maybe you're not finding the main trend. You're just finding a line, and that's really not even a good example of what I'm trying to explain to you. And you can see if you put this little small channel on there, you can see you could have found some more entries in here, but I just thought they were too risky there. There's not much room in that little channel. And you could get a break anytime, just like this right here. But, if you wanted to try to find some entries in there, there's your chance to do it with this trend line right here. And but where I was trying to go earlier, and I drug this off of right there on that failed second entry short there. Where I was trying to go earlier with this is people will send me their chart, and they'll have trend lines like that right there. And I'm not saying that trend line's not right, and it does seem to be holding prices up through there. So there's probably another type. See if we can find anything off the top. Yeah, so there's probably another larger channel even right there. But people, I can't even draw them because they're not correct, so it's hard for me to draw them, but they'll draw something like that right up through there. And there's probably some validity even to that. But the point I'm trying to make is you don't get a whole lot of touches of your trend line right there. You get a couple. You got one touch. You got these touches right in here, and then you got a touch. See, it kind of goes through it, and then you might even drag this up and get it to fit on the upper side, but there's just not a lot of touches of it, so you can't really trade off of that. You got to find the one that gives you the touches, and they're usually here every day, and a good trend, a healthy one, is normally about a 45-degree angle, and that's why you get these spikes and channels, because this is so steep that they can't maintain that kind of buying long enough to make a huge long trend like that. And so it kind of levels out to a normal trend, which is about 45 degrees. And so that's a good, healthy trend. Anything flatter than that is not very strong, and anything steeper than that, it won't be able to maintain it, because it's too much buying, and you can't maintain that kind of buying for a long period of time unless something crazy is going on in the market. And but you can notice on every one of these, even these small moves, you can get short-term trend lines. And what I want you to understand is how well they fit, and how many times it turns prices, and how many times prices bounce. And the other thing is, look how it fits on both sides. You're getting touches off both sides of it in turning prices. So it's not just off one side. That's how I usually help confirm. If I can't get a good confirmation on a trend line on the low side, like you couldn't get a good confirmation on this trend line. So I get it off the high side and drag it down. And then I try to find some other spots. And you can see that line has been working, all the way down. So, that just gives me more confirmation that it's a good line right there. And notice how when we broke below it here, we came back and tested it on the other side and then sold off. And that's another good sign. So, but there's generally a major, and like I said, we might even have a bigger one here, but generally there's one channel that kind of fits best, that gives you a larger look at things without going out too far. So I hope that makes sense. Then look for your measured moves. Again, you got that, and so that made the measured move. right there, and you can see that's exactly where we've gotten to and found resistance. Now, can we get through there? I don't know. We just have to wait and see what the price action does. But, you know, you should be able to find these kind of moves like that and find those targets. And, you know, that's how that's an easy way to find them. Once you add this channel, you know, you're mostly playing the EMA today for the most part. And as long as you did that, and that's another thing, I've talked about this several days in a row, several times recently, but people will get up here and they'll get this big move back right here, and they'll try to buy in here, and they wonder why they get trapped and it goes lower. And you got to look, notice how there's no rejection of prices at the EMA there. It just goes right on through. And it's after, you know, we're coming off a new high, big move up. And it runs. I mean, eventually there's going to be a break of every line in the EMA, and you got to play it out and look at the overall picture. But notice coming up through here, every time prices got back to the EMA, they bounced off of it. They found resistance, or either they just immediately reversed off of it. Notice that one right there. But then you come down here and it just goes right on through and goes over, comes back, and it gets rejected off the low side. And that's a failed second entry long because there's a double top, a lower low. That's a reversal type pattern. Didn't last very long, but it gave you two easy scalps right there, and then it reversed and starts going the other way. And another thing is, you know, when do you not want to enter these? When it gets too far away from the EMA. Same thing going long. This thing has been so far above the EMA here that, you know, that's why, and you're up here by this main line, that's why I didn't like taking any longs in there, because it's going to come back to the EMA pretty quickly. And that will help you filter out some losers like right here. You could have gone ahead and probably taken that short right there, and it would have given you a chance to get out, you know, once you saw that doji. But the reason you want to be careful is because now you've got two swings down and now a third little swing, and you hadn't come back to the EMA yet. You're just past time, especially in an uptrend. The bias is up today, so you got to be real careful taking these shorts. And the reason I like this one is because it's a failed second entry long, and you could count this one as a failed second entry long because you can count this double top as a new high if you like. But this is a reversal type pattern, a double top, a lower low, and then a lower high, and then a swing down, another lower high right off that. That's a reversal bar. And see, this one's not that, even though it closed on its low, that's another thing there. You didn't really get a good reversal bar until here, but now you're right down here at this low. It's a double bottom, and that's risky going short right there. So that's why I didn't mark that one. But let's back up, talk about the trades that we did see, and go from there. This was this was like early this morning. I marked it just because I wanted to talk about it. Here's a good one. Notice that there's a second entry long there, but we're not back to the EMA yet. And look how long we've been above the EMA. So it's a little risky. And then when it breaks up and turns back down, there's a chance there's a trap there. It went higher first and then broke below that bar. Let me back out a little bit more. We went higher, turned down. That's a nice little long trap, and you know, it's risky, but you had your little trend channel break. You actually had a break down here, but you had one right here and then a retest of it, and then another chance to go high. So there's a trap there. There's, you know, at this point, that's all the price action you would have had. So there's your break, and this just turns out to be a two-legged correction, and that's usually the middle of the move. And let me just show you. There's two legs in this first leg here, but that's common too. And then you can see there's your other leg right there. It's just a little two-legged correction. But there's two legs in that leg, then a correction, and then another leg back down to the EMA. And it doesn't get good rejection there. It finally goes higher, pulls back, and then gets your rejection. There's where you go long, a second entry long, and look at that move. They had everybody fooled thinking it was going to go lower there. And then it goes higher, and then you get a little double bottom. You know, you try to go lower twice. That's a breakout pullback long, a second entry, counting off the high, because now you're making higher highs and higher lows. First entry, pullback, second entry. It's not a great setup bar. You might have waited. Notice what happens here is you might have waited because you get a breakout pullback long. This is kind of a little trading range, and it broke out right there and then snaps back and then it turns back up. So you really even could have entered there, but by that time you got even more overlap and a couple more dojis. I didn't really like that one. This one, seemed like a no-brainer because you can get in so much lower. It's a double bottom. It's two tries to go lower, and it's a breakout pullback long. So that's why I like that one. But you had to ride out that little hiccup there, because people saw it as smart traders saw it as a trading range, and they're not buying until it comes back and retests and then goes up. And then we already talked about it. If you'd used this trend channel, you could have found some more entries, but it's so far away from the EMA. I just don't, you're risking getting caught up here in a turnaround, because you never know if you're just going to get a little correction like this, or you might get one like this. And you can't afford to ride that one out like this all the way down, because you might even get a break of this trend line here, and next thing you know, it's 6-7 points against you. You just can't risk that. So you're better off to stay out until you get the setup. And it wasn't long that comes right back to the EMA here, gives you a nice reversal bar. That's rejection off the EMA. That's what you want to see. Easy scalp, and you could have got that's a two-legged move. There's one leg up, a little two-legged correction, and then your second leg up. So there's your twos, two legs up and two legs in the middle of your two legs that go up. And so that's typical price action, what you like to see. And then you've got this is just a repeat pattern of this little pattern. It's a little bigger, but notice your move up, and then you try to go lower twice, and then it bounces, and you got your little bounce off your double bottom, and it goes higher, enough for a scalp, and then it tries to sell off, and then guess what? You get the same thing. You get another little two tries to go lower. It's a failed second entry short. It's right at the EMA. You can enter there, and this one turned into a little breakout pullback, kind of like this, like the other one down there I showed you. It's almost identical pattern, and then look at that reversal bar. Actually, we were talking about this part right here. It's hard to see all this because I got this so tight. Let me move all these out of the way so you can see it better. But notice your little double bottom, and then your little higher low and reversal bar. That's where I liked going long first. And then you get a little breakout pullback long right there, and then they just did it one more time, and you get another reversal bar. So you could have entered on any three of those, and easy scalp and a couple of points, and then it's really start struggling up here. And then you get your double top, and then notice how, you get your double, you get your double top right here, and then you notice how this falls off here and goes right through the EMA. It actually jumps over it. See the little gap? The bars don't overlap. Then it pulls back to test it. That's a failed second entry long. It's a double bottom or double top pullback short entry. I like that entry right there, right off. You probably wouldn't have had this trend line. I was looking at it as like a little breakout pullback off of this line, and easy scalp there, and then it comes back up again and gives you another touch. By this time, you should have had that line, and it's fitting off the low side. Comes back up, it touches, turns back down, and I was tempted. I started to make this one in green, but the fact that it went higher first and then broke out down here, this is one you might think about using a limit order, but it would have worked even on a stop. It had to pull back a little bit, but when it didn't go, down real fast, you notice how what I was looking for was a leg similar to that one, and when it didn't do that, that's another clue. Hey, these legs each little move down is getting shorter. Do you see that? Look how long that one is, and then this one's about a little longer, but not quite as long as that one, and this one's less than this one, and then this one is a whole lot less than that one. Then it kind of reverses, and that's kind of common. So, watch for that. Let me put these circles back so they're. I had to get them out of the way there. Okay, and then we reverse, and you don't want to go long here until you confirm. And if you draw it off those first few little swings right there, And again, if you can make another line fit like that one, it's even better. And you can see how it's fitting on those closes right up and down through there. Um, Too much overlap here, but then you get a failed second entry long, and this one shoots out the top, but it's so long, it's, you know, you got to be careful going long up here. So what I would do is drop a limit order in here. I wouldn't get too far back because you're likely to miss it, but this one came on back to the line again. So you could have entered here as well if you wanted to, but you know, hopefully if you used your limit order. But if you didn't trust waiting on a limit order, wait on this bounce. And then it even gave you another chance to enter here off that line. But by the time it made those couple of swings and couldn't go any higher, then you know, you might have been thinking that we got a little channel here. And you don't want to be going, you know, this was really your best opportunity to get in before those highs right there. But we're looking for a retest anyway of this channel. And so you're expecting prices to try to go higher, and then it finally breaks through and it takes off, and the smart traders are all getting on now. And there it goes until once again you get a double top, lower low, a lower high, and you're still making lower lows and lower. But look at this little channel here. Now you got a break and a new low, so we could go higher again. You know, follow the rules. Watch what you're doing. And you can kind of see this is just this turned out just to be kind of a midline between these two lines. And this stuff is not easy to do. It takes experience to learn to find these lines and to, you know, to be able to make them fit and to know that you got them right. Because I see people trying, and you know, and they'll find stuff that looks close, but it's just not right. And you know, and it's hard for me to come in here and demonstrate one that's wrong, because you know, it's hard to draw one wrong when you know, I could draw one wrong, but I'm not seeing it the way other people are seeing it. Maybe they draw one right across there, you know, or just try to find one that looks right across there. Maybe you still would have got an entry off of that one, but see, what they might have done, they might have drawn it from there to there, and they got a bounce here, and they watched it, and then they saw another one, and they finally take the one that bounces somewhere maybe right here, and it fails, and they get stopped out, and then watch it go straight up or whatever. So you got to make sure your lines are right if you're going to trade, you know, but you don't want to just trade the lines either, because I see people making that mistake. They think, okay, I found a line here, prices that come down, and this has been the big one lately, is knowing when, like this is not a good setup right here. Let's talk about that a minute, and then I'm going to wrap it up. I can't even get these let's back out of here. But notice this move down here. We had a failed, this is really a trading range, so it's not a good example, but we fell out the top, then we came down, and we fell out the bottom. Let me just draw that line so it's easier for people to see. The bias is up, so you're looking to buy anyway. But this would still be a good example. You fell out the top, then you fell out the bottom. You got a failed second entry short and a chance to get long, and it would have worked out great. But prices, notice how we got a new high, and then we come down and we make a lower low here. And so this is not a good setup right here. And people will take that setup and they'll say, well, what was wrong with that? You used a doji somewhere else. I'll say, well, your setup, there's 1, 2, 3 right here. There's 2 bars, not really a break there, but by the time you get this break above this little bar, you've got 1, 2, 3 bars that are overlapping, and 2 of them are dojis. These are both dojis. So that's not a good setup bar. You know, if it's rejecting prices above the EMA, and there's a trend line right here, and there's a double bottom also across here, if you've got multiple reasons to enter, it's a strong trend, which it is today, then maybe you enter. But you don't want to enter above that bar, or definitely not that little inside doji that's inside. A doji is a 1 bar trading range. The same thing as this, except 1 bar. And what normally happens, you fell out one side and you fell out the other, and it traps people, and then it does a little breakout, pull back long. So once it broke out of here, it pulls back and tests it, and then goes higher. And so, you know, you can't just find the pattern and think that it's going to work. Here's a good example right here. We had this new high. We get two legs back. It's not back to the EMA, but I'll see, I can guarantee you people could have found a trend line right there. This might be a perfect example. Yeah, if you wiggle this around a few times, you could make that look like a good trend line. And that's a good example of what people will send me, and they'll want to know why it failed. Let's just move all this out of the way. And they'll have that trend line, and they'll get this bounce. Oh, I saw a perfect setup. There's two legs back to the trend line, and there is right there. But that trend line's not right. And this is not a good setup. Notice that it's two legs back, and there's a little bitty doji. But prices aren't back to the EMA, and prices aren't back to they already broke the real trend line and retested it and are headed down. And so that's, even though that looks like a great second entry long off a possible trend line, I could see somebody getting that trend line right there. And but guess what? That's not a good setup. It's not right. And it's, first of all, even though you're getting some bounces that look like they're off that line, it's not it doesn't fit on the upper side. Notice that. There's no, get it where it fits right off both sides. Maybe right there. I think it was more like that right there. Let's just draw it where it fits the best off the upper side. And then you bring it down, and then notice how it's fitting. And there's that, try to use your closes or where it fits the best. Really fits the best right up through there. And notice you got your little break, a retest right there, and then you're headed down. So, but that's a good example. That looks like a possible. So you could draw that line right there. You could even draw it right there, and then you kind of get the same thing again right here. But you got the EMA in here now, helping you with your back. Usually that's where your best setups are going to be, is near the EMA. And if you got a trend line and the EMA at your back, that just strengthens it. So if there's multiple reasons to like a trade, you got to pay attention to that, and because that just strengthens it. And but anyway, I hope that makes sense to you. That's what I saw through about 10:30. And there just really weren't any good entries in here after that. Might have been a short here. It's a failed second entry long, so you might have liked that one. And then now you got a trading range up here, but the bias is up, so you got to be careful. But that's the reason I didn't have anything marked much after 10:30. There just wasn't anything. But anyway, I'm going to wrap it up. We're about 30 minutes in here. I hope that's helpful to everybody. Just remember, when you see these little dojis and little bars that just keep going higher and higher and real small corrections, and you can see the same thing on the way down, look the same. You might have a day where it's all down with these little bars like that. Those are strong trends. Even though they don't look like it, they're strong trends, and so you got to pay attention to them. But anyway, I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.